A person walks up to you and they say, "Hey, bro, trade Forex only 15 minutes a day. You'll make millions of dollars." So the first thing that comes to your mind is that sounds way too good to be true. Sounds like obvious bullshit. And it's not something that you really want to entertain. I'm going to show you two things here in this video. I'm going to show you, number one, why for most people, you're actually probably way better off only looking at charts maybe 15 minutes a day, maybe a little more, maybe a little less, but within that threshold. And the second thing I'm going to give you in this video is the exact method on how you can actually do this. Here's my promise. It's very, very simple. What's even better is that if you actually just want to follow this analysis every day that I do myself for free, you can join my free Telegram channel. There's a couple members in here so far. We've got a couple members who have already joined. And in this Telegram channel, I share all my analysis every single day for trades that I'm taking, trades I'm looking to take, things that are playing out, P&L, profits, terminal entries, like a bunch of different stuff. And you can join this Telegram channel by just clicking the link in the description, or I'll probably put it in the pinned comment as well. I show everything, no matter how things are going. Win, lose, ups and downs. It's all shown here in this free Telegram channel. And I've been running it for 7 years. So let's go to the actual charts now, and let me actually teach you what we're doing here. When you're trading Forex, you generally have two primary options. The first option is you can be a scalper. You can be a day trader. You can trade short-term price movements, and this is fine. There's nothing wrong with it. In Forex, you need to make sure that you have a broker that gives you pretty low commissions and also low spreads. It's hard for me to do that. I have Forex.com as my broker, so when I use MetaTrader 5 for entering, so I don't get the best spreads, I don't get the best leverage. Scalping is a little bit more of a pain for me to do. Swing trading, on the other hand, you could do with virtually any broker, virtually any leverage, and with any amount of capital. Obviously, if you have less capital, you can risk less, and you're not going to make as much money. And if you have more capital, you can risk more based on what your risk tolerance is, and you can make more money, potentially. It's important to consider that most people fail at trading, and you are probably going to continue to fail at trading, even if you listen to everything I say. Trading is risky, and most people lose money. But I will show you exactly what I do. You can take this, you can modify it, you can adapt it, you can apply it to whatever you're doing to maybe take some of the methodologies that I do and maybe use it for yourself. So the market moves up and down. This is nothing new. This is nothing magical. This is nothing fairy tale. We're not making any assumptions based on insufficient evidence. We're just saying that the market moves up and down. So what you'll generally see is that price makes highs, and then it makes lows, and it makes highs, and it makes lows, and then a high, and then a low. And the market can do this kind of going upwards, and a lot of people call this an uptrend. And the market can also do the same thing, and it does it going downwards, and people call this a downtrend. And everything will look different. Everything will go back and forth. Sometimes the market just goes sideways and doesn't really get past previous highs or lows. We call that a trend. Here's what you need to know. What you need to know is that, generally speaking, when price appears to be making higher highs and higher lows, whenever price makes a higher high, price generally has a pullback. And provided that that trend is going to continue, whenever price makes a higher low and then stops and starts trickling back towards the upside, that generally means price has a good chance of continuing up past the previous high. Now, what does a, quote, good chance mean? It just means a little bit over 50% of the time, it'll at least go try to get to the previous high, or perhaps even make a higher high. That's all that means. It just means that it's worth a shot to trade. Same thing vice versa for a downtrend. Price makes it low, makes a lower high, goes and makes a lower low, and generally what you see is price has a little bit of a retrace to the upside. Sometimes it's very short-lived, and then you just have another sell-off ensues. Sometimes you have a nice big retrace to the upside where it pulls back really far. Then you have it cascade back downwards again. And what you can do oftentimes is you can actually find areas where price might be bouncing at or reversing at or stopping at just by connecting where the highs and the lows bounce at. And if you see that price happens to bounce somewhere as resistance and it breaks above and it bounces as support, well, that's generally an area that you might be able to use in the future. You might be able to use price bouncing as support there, then it breaks below, comes back to retest as resistance, and then bounces away from it. This simple logic is called two things. The first thing is just called market structure. It's just where you look at the highs and the lows and you say, okay, it's going up or it's going down. It's an uptrend or a downtrend, or you can say it's in a range if it's not really breaking highs or lows. It's very subjective. It's very nuanced. The only way you get good at this is with enough experience. So just go get enough experience and you will start being able to get a little bit more of a feel on how to do this. I'm just teaching you the very basics in a simplified way so as to not overwhelm you with an hour-long video about buying at support and selling at resistance. One thing that you'll notice very quickly whenever you get into doing this is that price is not perfect. Sometimes price will break past zones. And so you'll sell at the zone. maybe you have a stop loss just above the zone and then it hits your stop loss like that and then it ends up just turning around and it would have gone down and been profitable, but you lost the trade. Other times you'll find that price doesn't come all the way back into a zone to actually allow you to have a tradable opportunity. So you're waiting right there, you're being nice and patient, get your entry at the zone, stop above, target somewhere down here, and price just stops right before it gets to your actual entry, and then it ends up just dropping without you, okay? But that doesn't mean that there's not plenty of other trading opportunities for buying at support, perhaps on a break and retest. It also doesn't mean that you can skip trading opportunities such as price makes a new high. Now, you don't know exactly where price will stop when it makes a new high, but you do know that the logic is that when price does make a new high, you generally have price turn over and come to the downside. And this just means that, the price makes a new high. Generally speaking, it pulls back at some point, makes a higher low, and then you're off to the races again. So what can you do in this situation? Well, let's say it makes a higher high and you think right there price might stop and turn around. Let's say you look at the daily, the 1 hour, you look at a couple different things. You see a price looks like it's stopping right there. So you enter a sell. You have a stop loss somewhere higher, and then you have a take profit. Let's just say perhaps at a 1-to-1. 1-to-1 is it's generally the risk reward ratio I use to structure trades, just because you have plenty of winners. And then when you have losing streaks, they're generally short lived if you have a win rate that's a little above 50%. And so you sell, price goes a little bit up against you, but at some point it does have that turnover. It pulls back and maybe it hits your target, or it gets close, then it starts bouncing and going up. So then you still close it in a profit. Maybe it's 50% of what the original TP was, but it was still a profitable trade. And you do this over and over again, right? You just sell all the higher highs. And then whenever you're in a downtrend, say you buy all the lower lows, provided that they've extended down far enough, you can just buy the lower lows. And when you combine this market structure idea, which is it's nothing crazy, right? You're just essentially looking at highs and lows and saying, okay, if it makes a lower low, usually it goes up. And if it makes a higher high, usually it goes down and pulls back. You can use this logic to find very simple trading opportunities. And what's even better is that if you combine it with ideas like support and resistance, which is just essentially this made up idea that, hey, price last time it was there, it bounced. So maybe it might bounce again. Whether it's that support or it's that resistance. Last time it was here at resistance, it bounced as resistance, and it touched as support a couple times, and now it's back here testing as resistance. Maybe it'll bounce this time. The main idea behind market structure and support or resistance and technical analysis in general is not that you have any sort of predictive power with it. It is that it gives you a way to control risk. It gives you a way of saying if price gets here to this area, let's say it's a resistance zone, that you think, okay, price might go down from here. And if I'm right, it'll bounce around that zone. It won't really go too far past it, and then it'll turn around and come back into profit. And if I'm wrong, it'll break past this resistance zone and then hit my stop loss. And then that will be that. Support, resistance, and market structure, and all of technical analysis. It just gives you a way of controlling risk. It's important to remember that. That way you don't get very upset whenever you have losing streaks. That way you don't get too excited when you have winning streaks. All you have to do is make a little bit more than you lose. And you can do this trading this way. Now let's get into the idea of spending 15 minutes a day on this, because I've just taught you the whole thing right here. You buy at support, sell at resistance, use 1-to-1 risk reward ratios. You pretty much do whatever the hell you want, and that's that. So how do you actually make use of this looking at a real chart in maybe 15 minutes per day? What I'm going to do is I'm going to show you exactly what I do every single Sunday, because today is Sunday. It's 11 p.m. here on Sunday. The market opens in about 5 hours, or just 11 a.m., excuse me. Market opens in 5 hours. I'm going to show you what I do. We can call this the pre-market weekly outlook or some bullshit like that. But I simply look at the chart, I set all my alerts, I get everything prepared, and then I go into the trading week. What I'm going to do is I'm going to do this in real time. I'm not going to slow this down at all for you. I'm just going to do what I would normally do, explaining it to the best of my ability within the time constraint of me doing it, without sugarcoating it or putting too much gloss on it or making it all razzle dazzle. I'm just going to do what I'm going to do, and you can watch. So you can time how long this takes, and we will do it. GBP CAD. I think GBP CAD will drop because it's made a new high. That's my whole analysis. I am in a sell right now on this one. I've actually called this trade this past week, and here's my Euro AUD sell, and then also the GBP CAD sell is right here. I've risked about, I think, like $40,000 on these trades, and the Euro AUD, I think I've risked like $5,000 so far. I'm probably going to be risking more on that one. Currently, as of this last week, it ends right here. It's ended in, I think, like a $3,000 profit so far. And if all these work, I'll make like $50,000, $60,000. So this is the GBP CAD trade that I'm in. All right. Euro AUD. I think price will go down because it's just made a higher high. And generally, when price makes higher highs, you generally have a pullback to the downside. So I'm short. Euro USD. I think price will bounce here at this resistance zone. I'm here on the weekly chart, but the daily chart, it's the same exact thing. You just kind of zoomed out. This is just a daily support resistance zone. You can use the 4 hour, the daily, the weekly. It doesn't really matter. Just the weekly chart, you could just kind of zoom in more, and it's less data to look at, and you're still effectively looking at a daily chart. I think price might bounce there. I have an alert there at the zone. If price gets there, then I will sell, most likely, depending on the context. Then the trade will look something like this, most likely. Euro Canadian dollar. I've set an alert here at this resistance zone. If price gets up into there, I will enter a sell. I'll probably be risking $20, $30, $40, $50,000 on this. Whatever I do, you can follow it in the Telegram channel. I post the analysis in here. So make sure that you've clicked the link in the description or the first link in the pinned comment and join that free Telegram channel. It is free, damn it. You can leave the group within 10 seconds if you don't want to be in there. It's fine. Just join it to at least see and check it out. And you feel free to leave if you don't like it. It's fine. GBP USD. I'm waiting for price to get up here into this resistance zone, and then I might sell. I personally like Euro USD better. GBP USD, I could take that as well. CAD JPY, I don't personally see anything. I know that some people would say this is a support resistance zone right here. For some reason, I just don't like this price action right here, how it slashed through it a couple times here. And we've already bounced recently and then made a lower high. I think this is actually more likely to break below this zone. What I will be looking for is for price to get down here into these lows. I'm going to go ahead and set an alert right here. This is what I would actually do. This is literally what I'm doing. If price can get down here, which would probably take a few weeks to do, then I'll probably be buying there. And then even if we just get a little bounce, see for each weekly candle, that one bounce right there would probably have me with a profit target hit. Because what would the trade actually be structured like? Well, there would just be a buy at the support level. You can either enter immediately, or you can wait for some confirmation, or you can, do a few magic tricks and see if you can time the entry a little bit better, whatever the hell you want. I usually just enter immediately, if the zone is clear enough. The trade will look something like that. Just a buy at the support, a stop underneath it, not like right below it, but not way far out either. Just a stop below the zone. I do a target at 1-to-1, and I just risk a lot of money per trade. I've been trading for almost a decade. I found that if you just wait for very good, simple trades, that seems to perform the best. Literally all my win streaks come from just waiting for good trades. Whenever I start entering too many trades or doing things and entering before, trying to say, well, I think it'll go down to the support, so let me sell it now. And then if it goes down, then I can sell it to the support and then buy the support. Every time I start doing shit like that, my performance suffers a little bit. So I've just learned that waiting patiently for good entries seems to work better for me. You do your own experimentation. This is what I'm waiting for in CAD JPY. GBP NZD. Price makes a new high. What happens generally after price makes a new high? Generally speaking, price just pulls back. So we've made a new high, new high, new high. I'm waiting for price to go a lot higher up here to 2.29. This is pretty much 2.3 essentially. And then I will be looking to sell. The trade will look something like this right here. So that's that. GBP AUD, sort of the same thing, but I'm already short on GBP CAD, and I'm already looking for an opportunity on GBP NZD. I've sort of disregarded GBP AUD because the asset is too correlated to the other trades that I'm looking to take. So I don't want to be overexposed to GBP shorts, so I'm just leaving that alone. USD JPY, I have an alert here at these lows right here. If price gets into these lows right here, I'm just using these two to reference, because if you extend the zone further left like that, you don't really find anything clear. I do know that the last 2-3 times price has been into this region, it has had a nice bounce. I think that's very likely. So I'll be waiting on this along with CAD JPY, sort of the same trading opportunity. NZD CAD, I cannot say I actually see anything on this right now. It looks to just be going sideways. NZD CAD is one of the most mean reverting Forex pairs. Doesn't look like anything to me. Euro GBP, I cannot say I see anything on Euro GBP either. We've already bounced here twice at this support zone. I do think that if price breaks below this zone, there's two things I could do. If price breaks below this zone and does something like that, I would look to buy, because price, when it makes a new low, generally you see a reversion. So I could buy, and then if it does work out and gets up to here, I could then sell at this support resistance zone, thinking it'll turn into a break and retest and a continuation to the downside. The fact that it appears we have a downtrending market structure also helps that idea. That's what I'm waiting for in Euro GBP. AUD USD, I see nothing. AUD CAD, I see nothing. USD CAD is at a weekly resistance level, and I do see it dropping, although we have been ranging here since December. So I don't really see this dropping anytime soon, although I will also say, as you know, I'm short on GBP CAD, and I do see that dropping sometime soon. So perhaps that pressure will apply here to USD CAD as well. Maybe we'll see a fall. For right now, I'm not doing anything on USD CAD. I'm already in GBP CAD, which is a correlated asset. I'm going to stay in that one. AED JPY, I have an alert here at the lows, but to be honest, CAD JPY and USD JPY for some reason look better to me. If this looks better to you, then perhaps maybe you should buy AED JPY if price gets down there. NZD USD. Price has already bounced here at this support level, but it has taken price literally 2 months to be able to come off the support zone. It's taking a long time. I don't see any trading opportunities at the moment. GBP JPY, I see nothing at the moment. USD CHF, I see nothing close by price. We did have a recent pretty good trading opportunity here at the highs. That was fine. Now if price gets down here to these lows, then and maybe even the highs again, that might be a good trade. Euro JPY, I see nothing for the time being. It just bounced at support. I think at some point this is likely to break the support, so I see nothing. That is my trading analysis. Now, I want you to look at how much time it took me to actually do that. What did it take me? A couple minutes? 5 minutes? 10 minutes? It probably didn't even take me 15 minutes to do. And that's with me essentially just doing a bunch of needless talking, adding a bunch of fluff to it, and it still didn't even take me 15 minutes. Now, what does the rest of my week look like? Honestly, if I wanted to, I wouldn't even have to look at a chart again for this whole week. Why? There's 2 reasons. Number 1, I'm already in the trades that I'm in, and I've already executed them last week, past 2 weeks really, and I've added to them and managed them dynamically. And they're either going to fall and hit TP, or they're going to go against me and hit stop loss, and I'll lose tens of thousands of dollars. Whatever happens, I can't control. I know I'm going to win trades, and I know I'm going to lose trades. And all I can control is whether or not the next trades that I take, I get an entry that I'm comfortable with, I put the stop loss and have a risk structure that I'm comfortable with, and I risk an appropriate amount on it that I'm comfortable risking, given the context of the trading opportunity. I don't even have to look at my chart ever again on TradingView until I get a notification to my phone that one of my TradingView alerts has been hit and that there is the potential to enter a trade. If you're just waiting for price to get to key areas on the chart where you think it's likely to bounce, whether that's a support level or a resistance level, or whether price has just made a higher high and you're looking to sell, or price has made a new lower low and you're looking to buy, trading very simply like that, using higher time frames like the daily and the 4 hours, usually a good chart. If you use the weekly and you zoom in, it's almost the same thing as the daily. And if the daily is zoomed out slightly, it's almost the same thing. So it's not really that big of a deal. But if you're using higher time frames like daily, 4 hour, even the 1 hour, provided that you've structured the basis of the trade based on maybe like the daily or the 4 hour, you can look at higher time frames and you only really have to look at the chart once per day max for maybe 15 minutes. And again, you just saw me do all my analysis this week. It didn't even take me 15 minutes to do that. It took me however long that was. I assume it was over 5 minutes, but I assume it was like either 10 minutes or under 10 minutes slightly. It's really not that complicated whenever you learn what you need to focus on, which is keeping things very simple and controlling risk. If you just do these 2 things, while I cannot guarantee you anything, I have taught thousands of people how to trade. And while most people fail, regardless, I have seen that the ones who do get profitable tend to keep things extremely simple and they control risk very well. They never have some excuse walking across the tightrope of mental gymnastics as to why they took the trade, or all these different reasons and the fundamental context and the economic news and the Wyckoff distribution, liquidity, upwards thrust after distribution spike, entries, trading strategy. They didn't do any of this crazy stuff. They're like, yeah, price went to this zone and I thought it would bounce off of it, so I entered a sell. So it's usually something very simple. And they always have a way of controlling risk, whether they're using hedging or dollar cost averaging, or stop losses, or adding to winning trades and dynamically adjusting the stop loss, or maybe even, whatever else it is there's people that are doing to control risk. There are many ways to control risk. If you're new to trading, the best way to control risk and the simplest way to do it is just to use a stop loss and a 1-to-1 risk reward ratio. That's just my opinion. So given what I've shown you here in this video, you now have a trading strategy that you can actually go and implement right now, today, put in practice. And not only that, but it's a trading strategy that doesn't really take you that long to do every day. The charts don't really change much on the daily and the 4 hour. And if you're having your alerts set, whether that's for trades that are going to take profit or stop loss, or whether that's waiting for entries on the specific trades that you're looking to enter, you don't really have to do anything until you get a TradingView alert. So honestly, after you do your initial analysis at the beginning of the week, like you saw me do here, you don't really have to do much the rest of the week. Most of profitable trading is just waiting for good trading opportunities. And the more you do it, the better you get at selecting what the, quote, good trading opportunities are. And you have so much time to think about it and wait for really good optimal entries if you're using things like the daily and the 4-hour time frame to do it. And on top of that, the third reason is that, or the third thing I've given you, is that you can actually follow this all for free every day in my Telegram channel. It's a Telegram channel that I've been running since 2018, so for the past nearly 7 years now. And I've been sharing all my analysis, my trades, the P&L, literally everything in there. So make sure you go check it out. With that being said, if you liked this video, then do whatever the hell you want. I'll see you in the next one.